Easy Money Machine, where we show you the easy, no-nonsense way to financial and time freedom. Here are your hosts, Graham Brown and Erik ten Haver.
What are we going to do today, Graham? You challenged me to go and do something today, I think.
Yeah, no. I mean, this whole sort of business of raising money is a tough one, isn't it? I mean,
right.
If you sort of read any of Robert Kiyosaki's Rich Dad Poor Dad stuff, it's always, the difference between an amateur investor and somebody who's really successful as an investor is their ability to go out and raise money, to ask for money. And we're not talking about going to the bank and filling out a form.
Right.
That this is the difficult part. I say difficult. It shouldn't be difficult, but it's the what we have to overcome is that fear of going to ask people for money. And I know, I've not done it. I've not gone to friends and family and asked for money for investments, but you've actually explored that option. So, I'm really curious as to what sort of conversations you had. Is it something that I can do? Because I don't know. For me, it's like never do business with friends and family.
Now, this is interesting. Yeah. So is this a principle that is valid and needs to be followed, or is it something to be explored and can it be looked at differently? Right. So maybe a little bit of background, and that is, as maybe people in the group that are new might not know, but I've got two property businesses. One is in Indonesia, and one is in the UK. In the UK, I have one investor who's my brother, who has lent me money to go and start that business, besides my own money, besides the money I've put in myself. And the process of getting him on board was relatively straightforward, because he went with me on a trip where I looked at some options on what to do in the UK, and he was quite excited about what I was doing. And I think he's in a stage of his life where his children are more or less done with their education for the most part, and he would like to find a way to make some better returns on his money. So then I invited him to come in. Now that
did he ask you first? Because that's kind of important. Did he say, "Hey Erik, how do I get in?" Or did you sort of say, "Hey, how about this"?
I don't actually know anymore, but it was a very natural process whereby he came with me for a week and we went around. That was also the week that I met my business partner in the UK. So it was sort of a lot of pieces fell in place. And then when I had my first deal ready to invest, I asked him whether he would be interested, I think, to join, because he sort of expressed after we ended the conversation of the trip saying, if you make some progress, let me know, and then maybe we can do something together. So he was sort of already interested while we were in the UK, and then it was a quite easy ask to do. Now, am I worried that I won't be able to abide by my obligations towards him? Yes. And I think that's something that you need to be really aware of. I mean, if you do take on money, make sure that you don't overstretch yourself. So make sure that you don't take on so much money from others. At least that's my view, that you're in a situation where you don't think you'll be able to repay in the case of an emergency. So my situation is such that should he want to or need to have his money back now, I would be able to liquidate funds so that I could repay him. And
how much are you okay to talk about how much you borrowed?
Yeah. So in his case, it was, I need to think that. I think it was 160,000 euros.
Right. That's a substantial amount of money.
Yes.
For, it's not a huge amount of money for an investment, but, it's not like he was lending you $5,000, right? Which,
no.
This is probably his nest egg or his savings fund.
Right? Yeah. Also in his case, this spoke about, this is not, all the funds that he has available. Also in his case, it's not a full bet of, everything on red. It's clearly also, just a part of what he does. But it is a substantial amount of money. I did make a formal agreement with him. So that's another thing that I would suggest. If you borrow money from family, especially from family, make sure you put an agreement in place and write down. And you don't have to be that complicated about it. You can download a lot of forms like this from the internet. There are services whereby you can modularize a loan agreement, so you can put in the terms and conditions you want to get in, and the thing generates a loan agreement for you. In the UK, there's one site which I'll put down below. I think it's lawdepot.co.uk.
Right. Yeah, that's right. I've used that before.
Where you can put an agreement in place. I mean, anything is better than nothing, because it's better to speak about worst case scenarios and how you want to structure it if things go wrong before you borrow the money than afterwards. So always put a loan agreement in place. It also makes you look professional. So it's not like, okay, thanks for the money. By the way, I'll send you an email confirming that I've received it. It's really, okay, this is the terms on which we're going to do this, especially with family. But
I think that's a good point. I mean, I just want to add there is that, I mean, I've been involved in financial transactions with friends and family, and I think it's really important to stress this point, is that you have to, because it's friends and family, go even further and document it and write it down, because you may feel it's unnatural. You might think, oh, this is really weird, like treating my brother like a business partner and writing this all, like, you might be thinking, oh, don't you trust me? Why are you writing this down? But because there's all that sort of inherent trust and relationship, you have to then document this stuff, because actually that could go a lot further wrong, where you just kind of assume, that this is going to work out. And that's worse, because with a business partner, it's fine. But with family, they're there to the end, right?
Yeah. I mean, coming to think about it, I've always done it. I've also done transactions with my sister, and it was always, we've always formalized it, because, and it's not because there is distrust, but I was the one insisting on it. I wanted to have things on paper, because you need to, once you start doing property, you have to realize you're in the business of doing property. It's not that you're buying a house and you're renting it out. You are starting a business, whether or not you have 1, 2, 3, 4, or 5. You're now running a business. It means that if you get money in a normal business, anybody borrowing or investing in you gets an agreement. So you're in the business. So you need to make an agreement. You need to write it down and formalize these terms with people. And again, like I said, you can go very far as to taking a lawyer and both sides getting a lawyer to put a contract together, or you can choose to write something up yourself, or you can choose to use like a pre-formatted form that I used in the UK. I'll talk about it a bit later. In Indonesia, I actually got a lawyer to draft a loan agreement, because agreements, you can put out the terms, but you always need to also abide by the law in which you're operating. So in the case of Indonesia, I mean, you need to make sure that you describe things in the right way, in the right terms in the agreement for it to be legally strong for both parties. So here I've invested in making an agreement, which in Indonesia is not that expensive. And I don't do it every time. I just use that agreement every time I have an investor. Legal point, very important. Now, then sort of maybe to address your question about how do I feel about it, right? How do, your objection to going to friends and family. So here's the thing. I think that before you go to your friends and family, you need to know what you're doing. So you need to prove to them and to yourself that this is not just, a wild thought that you have for which you're trying to get them to invest with you. And I think in my case too, I mean, of course, my family has followed what I've been doing over the years, right? And yes, property is new to me, but I've been in business for a long time. And I've always been transparent about what I do, right? So the trust of what I do and that I know what I'm doing is sort of built. And at that point, whether or not it's a stranger or a family member, to me, I prefer somebody closer by to invest with me, because if I offer somebody to invest with me, I need to be convinced that this is going to work, especially for the property side. If you're talking about startups and venture capital, I think that's a different story. I'm raising money to go and purchase an asset, and I have this asset backing up the loan and what I'm doing. If I would ask you or other friends to invest in a startup of mine where I'm not 100% convinced that this might work, I would be more hesitant, because then I'm really putting money in a risky venture. While I think for property, of course, there are risks, right? But the underlying asset that I'm purchasing, there are bricks, there is a real thing underlying all of the things that I'm saying to people. So therefore, close by to me, I'm fine with it.
I was going to ask about, structuring or staging this, because I have borrowed money in the past, from family. Like, I mean, like any child would have borrowed money. And one thing I realized at a young age is that it was better for me to borrow money when I didn't need it. And my logic was, at that age, I could borrow money from family and prove that I could pay it back, and then win their trust, because you've got to establish yourself as a good borrower, right? And therefore, if you were to borrow, let's say, for example, if you were to go in, I'm just wondering if this was a possibility, if you were going to go in with your family, rather than going in at the full amount, start with something really small, prove yourself to them. Does this work out? I mean, you don't know. I mean, even if it's like $10 on the table, people can fall out over this kind of money, because people just change with money, right?
Yes.
So I'm just wondering if that's an option. I mean, you went in at 160,000, but in hindsight, was that the right amount to go in? Would you sort of advise people to go in at the full amount, or
no? In my situation, that was not the full amount of. I've on top of that, I've invested a multiple of that into the business, right? So it's not like I borrowed all the money to start my UK business from my family. But I do think that, like, I always have a plan B and plan C. I mean, if everything goes bad, I would, like I mentioned earlier, I would always have a way to repay this debt. It might cut into my own reserves, but therefore I think it's always good to, the borrowing of the money to me is always a good thing to do, even though you might have the money yourself.
Right.
So I do have some reserves, but I'm happy that I have those reserves for myself. If they need to be used to repay this debt because I can't do it from the business, I will do it. But I prefer to already be borrowing money from investors at the point where I still have a spare myself, so that I, worst case, I can use that to repay my borrowers.
Right. So that would be, I mean, some people may ask, why would you borrow money if you have it yourself?
Correct. The answer is, first, I think to grow any business, I think it's a number one skill to have, that you can raise money for whatever you're doing. That's my personal opinion. I think, especially for me, where, the working capital that I both need in the UK and here is quite large, raising money is a way for me to grow the business. So, and it's a skill. I mean, I'll be honest. I mean, it's not a skill that comes very natural to me, but it is a skill that I think I need to develop. And therefore, as soon as I had the chance, I go out and try to raise money for my ventures.
Right. Yeah, very true. And it's a skill which I think you have to get over, right? You have to get over if you want to be in the business of getting beyond just buying one or two properties and creating a business out of property, or you want to grow a business, you have to learn how to ask for money and raise money. And I suppose this is what we're going to talk about now, isn't it? It's like your experience with that.
Yeah, exactly. And I think what I was planning to do today is I have a fundraising effort going on right now in Indonesia. So I have a development project that I do in Indonesia, for which I'm looking for investors. And what I thought to do today is just to take you through the fundraising document, because the sections there can explain how I approach this. Now, I'm running the risk that people that are interested in this project might be in the group or might come into the group, but I decided, okay, I think it's better to just be transparent to everybody in the group about what I'm doing, even though in the future, future investors of mine might join this group and then see later on what my numbers look like. Because if you go to an investor, usually you go with a proposal. Not necessarily do you reveal what your margins are. This is also an approach. I mean, you can go to them and say, look, this is the deal, and don't reveal what your side of the coin looks like. But this is a trust issue. If you're sketchy about that, and if they ask you a question, so how much are you going to sell these houses for instance, right? And you don't answer it, then it's like that's an alarm for many people. So I prefer to just be open, and if I lose an investor because I'm open, I prefer to lose an investor because I'm open, instead of having to hide my answers, so to say.
So you're talking about how much money you make on the deal, right? That's what you're saying. You might be a little bit afraid to tell an investor because they find out you're making twice as much as them.
Yeah.
Some investors might think, well, actually, why am I paying all this money?
Right. So, and that is the case, and therefore you will need to have the right answer for that. And if you can't justify the fact that you're adding so much value to this that you are entitled to make more than they do percentage-wise, then it's a bad deal. I mean, I feel that I have a lot of value in this particular situation because I create the deal, I built the house. We'll see in the document in a minute. But if that value is not being perceived, then people won't invest with you, right?
Yeah.
So let me take you through my my investment document, and I'll keep the both of us in the corner if I can do that. There you go. So I'll go here so I can see it. So I'll zoom in a little bit more in a minute so that we can go to the details. But what you will see is a document that I use to go to investors for money for a new development project. So first page is basically, it's an investment proposal for 2 houses, which you can see at the bottom. This picture I will explain later. The houses are not done and the drawings are not rendered. So what I put here is a picture from my architect that would be a similar kind of building that I'm going to build, but it's not done. That's why it says it's a design reference only. And then another thing, just a small tip, but in the bottom here, I would always write down for who I make this document. So let's say it's for Graham. I would always put here Graham Brown, and I would send it to them in a PDF. The reason for that is that if you go and forward this to somebody else, obviously you could edit this, but then I know that this is the copy that I've sent to you that is being circulated. I don't mind, but I want to know which copy was going where. So I just put the name of who I send it to. I PDF it. The other good thing is if you make a PDF of every document that you send to every investor, then you have in your directory, you can clearly see who you send it to. So it's just a simple administrative trick that I use. And then usually the date and how many pages. I'll try to go and zoom in a bit more so we can see this. I'll go to fit the width so we can go down to this. Okay, so that's the picture, and then the sections of the agreement come in. So, or not agreement, but the document. So the first thing that I always put in is our background. So why? And this is interesting because the people I speak to usually know me, but they might not know that I'm doing the property development business with my wife. Who you can see on this picture. So I have a very light-hearted, relaxed picture because that's the kind of, that's the kind of image that I think I have to many people, and that's why I use this photograph. I explain who we are. So, Erik and my wife's called Meti. I talk about the training I had in the UK for doing property investing there, what I've been doing so far, and then the fact that I have a rental portfolio in the UK. So I establish sort of, look, I've done this. I've done this before. If you have never done this, be open about it as well, I would say. So if this is your first project and you're raising money for it, just be honest about it, saying, listen, this is my first project, and be transparent to people. Then what am I doing? Okay, in Jakarta, I've developed residential houses and I've finished and sold 5 projects so far. And I've got 1 project completed and ready for sale. I'm always completely transparent about what the current situation is. If they ask how many things did you do, I never say more or less than what is really happening. And then, okay, with this document, I'm inviting investors to join this property development project. Then the second part is a project outline where in a couple of paragraphs I outline what it is that we're asking for. So in this particular case, I'm purchasing a 300 square meter, which you can see here, a 300 square meter plot of land, which is going to be split into 2 plots of 8 by 19 meters. So I'm buying a piece of land and I'm going to build 2 houses. I also mentioned that I've already checked the permits in this area, so I'm certain that I can split this plot and I can build 2 stories, which is not always allowed here. And then the price of the land is agreed at 3.6 billion rupiah. I will in the calculations, I'll have US dollars later, but basically that is the amount of money that I have agreed to purchase the land for, but the legal process is still ongoing. I'm estimating that this legal process is completed end of February, and then I will need money from the investor. So paragraph number 2 says, how much money am I looking for? What am I going to do with it? When do I need it? Then I put a disclaimer. Sometimes I have the disclaimer at the end of the document, but here I have it in the front. The key thing is that basically what I say is, look, this is the information I give you today is as best I know now, but you need to you need to be aware that if you're investing in property, it can be very rewarding, but there are risks and you need to be aware of it. So it's not a legal disclaimer, but I always put this in saying, look, if you've never invested in property, please understand that there can be risks. Okay, so that's clearly what I open with. Then what I do is I show them where the place is. Now, this is tricky. If you trust people, then you can send them this document and show them the location. If this is a document that is being brokered, so it's being sent by somebody to somebody else, then I usually remove it, because you always have the chance that the person that receives it goes to the landowner and goes and buys the property under your nose. So that could happen. Yeah, that's that. And then the next part is the current situation of where we are at with this. So in this particular situation, it's an old house, and it's in a dead-end street. So I'm basically buying a plot with an old house on it. And then I usually, before I go to my investors, I would have done some design work already. So I would have gone to an architect to make at least a floor plan. Just checking if Graham is still there. Are you still there, Graham, or not?
I am here, yeah.
Okay, perfect. So the reason for this is that, especially, I'll zoom out a little bit here so you can see it. This is interesting because a lot of investors would like to see what is going to come out of this project, right? So what I do is I usually make floor plans. An architect can do a quick floor plan usually. It's also good for me because I have an idea about how many bedrooms I can fit in, etc. So I would have, like this drawing, I would have a floor plan of the ground floor, and then on the second page there's a floor plan of the second floor. In this particular case, I mean, if you're interested in the details, but let's say first floor is basically a living area, a kitchen, a powder room, and one bedroom. Again, in Indonesia, it's very important to have a bedroom on the ground floor, because if it's not for the occupants, it's for the parents, because a lot of families here have parents living in. And therefore, if you have a house without a bedroom on the ground floor, it's hard to sell, from my experience. So that's why I always squeeze a bedroom in on the ground floor. And then on the second floor, there will be 3 bedrooms and a small sitting area and a couple of bathrooms. Nothing too complicated, nothing too fancy, but this is basically what sells. I know that these kind of houses are in demand. So then after the design, I go to project management. Basically, I'll say, okay, how we're going to build this. In our case, we manage to build ourselves, but we're using experienced builders and architects. And I tell my investors that you'll get quarterly project overviews with how things are going. Then I have an estimated project timeline where I say, look, this is what I expect the time frame for this project to be. Better be pessimistic and a bit, overestimating the time you need than underestimating. So in this particular case, I've broken down the process to the purchase, to getting the building permit, to building the building, and then to the selling process. It can be from 18 to 24 months. So my realistic scenario is 18, so a year and a half. Pessimistic is about 2 years. I'm working very hard to make it faster, but I never tell my investors that it's going to be faster than this, because I will do it as quick as I can. But if not, then at least I think within this period, I for sure can finish the project. So maybe before we go to the investment terms, would you like to know anything else, Graham, or no?
No, it's good. Let's go through. I mean,
okay.
Keep going. Let's get to the end, and then we can maybe sort of backtrack some of the key figures.
Right.
I see they're coming up now. So
I have 2 steps in the figures. The first one is the terms that I offer my investors, and then the second one is what that will result for on my side of the equation. So initially, the first times that I went out and raised money, I offered people a profit share in the project. So basically, you come in with money and you get a certain percentage of the profit. If you do that, then investors will have a lot of questions about, okay, how do I know that your costs are accurate? How about the selling price? Are you going to sell it cheap? How long is it going to take for you to sell? So there's going to be a lot of variables for them to figure out what their return is. And I've decided, look, I mean, this is my first sort of round in raising funds for Indonesia. I did have friends and family investing in previous projects, but this is the first time that I really go out to many people to speak to them to see if they're interested in investing. And therefore, I decided, look, I'm going to make this much simpler for them. So I'm telling them that I'm looking to borrow from you as the investor, the amount that it cost me to purchase the land. That's actually the equivalent of the 3.6 billion that you saw in the previous slide. So it's around 265,000 US dollars. This can be one investor, can be two investors, ideally not too many, maybe three. And in return for you borrowing me this money, I guarantee you a 15% return per annum. Now, to many people, this might look high, but it's actually, for these kind of deals in Indonesia, it's not that high of a return on a loan. It varies between 10 and 20%. So I took the middle way here. And then I tell them that the minimum term that I need the money for is 12 months, and the maximum term that I expect is 2 years. But the 15% will be paid per annum. I need the funds early March. How am I going to structure this? I'm going to have a loan agreement between us. The land certificate will be held in escrow at the notary. So here all transactions go through a notary. So I'm telling them that, look, the notary will hold this certificate. The reason for that is that I will agree with them that on top of the land that I'm buying, I'm going to build the property. And if I default on the loan, so if I don't repay or I don't pay the interest, basically the land and the buildings that I've built will transfer to the investor. So their security in this deal is that if things go wrong, everything that's there on the land and the buildings will go to them, which of course they then have an issue of selling that, right? Because that's not what they want. But at least I can offer them, look, if everything goes wrong, you own this asset. And then obviously, when we sign the agreement, I need to receive the money. That's basically the last term for the investor. So on our case, what we cover is then we cover the purchase expenses, which is a lot here. You have taxes, you have notary costs. You need to change the name on the land certificate. That's all our expense. We cover the building costs. So we do the architecture, the permission, and the construction of the building. And we also cover all the selling costs, which is, the tax, the broker commission, the marketing, etc. So what we're telling the investor is that the 15% you're getting on your money is outside of all the other things that we're doing. So that's the terms. And then I usually close the proposal with what I've done so far. So I have a slide or a page whereby I tell them, okay, this is what I've done so far. These are 2 houses which I've sold. This is a one house that I've sold, built and sold. And then the last one is our last project, which is 2 houses side by side, of which one is sold and the other one is on the market at the moment. The good thing about this is, I can take them around and show them these buildings. Say, look, this is what I've done and what I've sold. If you have not done anything in the past, then obviously there's no track record here. And then you have to admit, say, look, this is my first project. But I might have experience in, refurbishing my own house or purchasing my own house. Some sort of track record is always good to put into the proposal. Now, this is the expected results that I think are going to come in from this project. And as I mentioned, normally I would explain this verbally to an investor if they ask. And if they ask on paper, I will give it to them on paper. But normally I don't put this in the proposal. The reason is I want them to be comfortable with the terms before they start looking at my numbers and possibly arguing on my numbers. So this is what this project is going to look like roughly. This is some estimates, of course. The land will cost $265,000. I will have purchase cost of about $5,000, and my building cost I expect to spend about $140,000. So my total cost of building this is going to be 2 houses, is going to be $410,000. Now, this is the big variable. I expect a selling price of around $585,000 for those 2 houses that I'm building. I will have selling cost of about $25,000, and that's including, that's the commission for the brokers that are selling my house. That includes notary cost, that includes taxes. So then my net income on this particular project will be $560,000. Again, the key variable here will be the selling price. Am I able to get the price that I expect for this particular project? And that might be scrutinized by my investor. They might ask, "Are you sure you can get this?" Well, the main reason I'm showing this to them is that, look, I mean, I'll be making money from this, but let's assume that I would get a lot less. I would still be able to pay you. That's sort of why I want to show these numbers to people. So my net income is like I mentioned just now, 560,000 US. My total costs were 410,000. So I will be making a margin of about $150,000 on these two houses. That's my expectation. Now, this also sort of fits with what the average equation is, which is normally in a normal kind of situation, people usually think roughly that the land is one, the building is one, and the selling price is the margin is another third. So that's usually how people look at projects, right? Land price is about a third, building cost is about a third, and the selling margin or the margin you make is about a third. Now, as you can see here, it's slightly different, and that's because I'm buying land in Jakarta, whereby the land prices are pretty high already as it is. So it's not entirely correct here, but you can see that there's a healthy margin in this project. Now, assuming that it's going to take me 2 years to complete this project, I would then need to pay my investors the 15% times 2 years. So I need to pay them 30% over their investment. Now, if you take 30% over the 265 over here, which they give me, then that's roughly 80,000. It's slightly less than $80,000. So in this case, the investor gets $80,000 and I make $70,000. But I've also invested my own money in this, right? So the building costs, these two items over here are mine. So I need to invest about 145,000 and the investor invests 265,000. So I have my own money in there. So my ROI on my money alone is of course higher than the investor's ROI on their money. But on top of this, I need to source this deal. I need to project manage it. I'm making sure this gets done, that it gets sold, etc. It's not the effort I put into finding this deal and putting this deal together is basically the reason why my ROI on my money is higher than the ROI of the investor on their money. So that's sort of the secrets behind what I'm doing right now. As I mentioned, this is how shall I say this? This is work in progress. So we are. I'm in the middle of looking for investors for this particular deal. It's not a done deal, but yeah. So this is my journey towards finding investors for this particular arrangement.
Okay, this is very interesting.
Yep.
I want to ask some questions. Is that okay?
Go for it. Be my dummy investor and ask me the difficult questions. So
one of your terms on your term sheet, you said guaranteed 15% investment.
Yeah.
Immediately, as a potential investor in any project, if somebody says guaranteed returns, I'm skeptical. Right. What are you talking about there? Because there's never any guarantees, anything. Nothing's guaranteed. So what are you saying there? Yeah. Is that necessary?
Well, I mean, it's a good term. You're not the first person that asks me about this. So maybe I need to remove the term guaranteed. It's a good idea. What I mean is that I will, at conclusion of this project, my investors get paid first, basically. So right. They will get paid their 15% annually on the loan. And then if I did a good job, I make money. If I did a bad job, I don't make any money. But their returns are not dependent on whether or not the house gets sold at the right price or not.
Okay.
So theoretically, if I lose money on the project, I still need to pay them.
Right. Okay, that's fine. Just curious what you actually meant by that.
Yeah, that's what I mean.
If I hear guaranteed returns, to me, you can't guarantee a return. But what you're saying is correct, right? I mean, what you're saying in terms of like investors get priority in terms of the front of the queue for the payout, right?
Yeah, I think that's it's very good feedback. So what I'm going to do is probably add the phrase like you will get paid first or something, right?
Right. Yeah, I'm just wondering what the standard terminology is. Okay, that's just something that I saw. Okay, and so I mean, you're right about the 1-1-1 breakdown. That's pretty common, especially in sort of land up deals.
Mm-hmm.
And what were your numbers for that? How did it work out? So you say 560 out on, was that on both properties or on one?
Yeah, I can. That's on. These numbers are for both. I'll put them back on the screen so we can have a look at them. There we go. Yeah, so the return is the selling price is 585 for both.
Right.
Yeah.
Okay, so it's 585 for both, and selling cost of 25, so net income of 560 less 410. Is 410 including paying the investors, right?
That's the number from up here, right? So that's the loan, the purchase cost, and the building cost.
Right. So that's your profit without paying back the investors, 150,000.
Yeah, correct.
Of which you pay 80,000 in interest to investors, and you take 70,000.
Right.
Okay, so you're making about. Well, I mean, cash on cash is a different matter, but as a yield, it's about 7-8%. No, that's 15%, right?
Yeah, I make about 50%, right? Because I make the 70 over, let's say 145 actually. But so I make about 50% on my money over 2 years. They make 30% on their money over 2 years.
Right.
The difference, of course, is that my upside is in completing this project faster and in selling it higher.
Yeah,
that's where
what's still minimum? What do you have to break even? Your break even is
410, 500. But I have some I'll have some selling costs, which is slightly it's not fixed, it's slightly variable. But let's say 435 I need to make to break even.
How does that work out? Because you're 435, so you're making 70,000 profit, right?
Yes, correct.
So surely then your break-even selling price is 515, no?
Yeah, correct. I mean, if you mean break-even including repaying my investors, that's correct.
Right. Okay, but is that not? How does that work? So I know this goes back to the guarantees, right?
Mm-hmm.
How does that work? Because even if you don't break even, do you pay the investors back?
I intend to. So even though.
What's the legal standing from the document? Right.
So it's a very good point. But basically, I consider this, they borrow me money and it's a loan on which there is a fixed interest which I need to repay.
Right.
I am the one taking the risk. I'm the one needing to manage this cash flow. So my investors are not sharing the risk of a downside on this deal. I want to make sure that they get their money back. And to be honest, if this would go bad and I would not be able to give them their return, I prefer to pay them the interest out of my own pocket and get the credibility for them to go and invest again.
Yeah, I understand. I mean, I know your background as an investor and a project manager yourself, and I know you're good to your word. I'm not challenging that. I think that's fine. Because I'm just curious to know, because what you said the break even was and what I thought it was different. Which is important, because the difference really was the interest paid to the investor, right?
That's right. So my margin is the 70. So let's say if I would sell for 70,000 less, roughly. So as you mentioned, in this case, the 515, that would be a break even for me.
Right.
So maybe we put that in here so people can see it, right? So break even for Erik.
Yeah.
Would look like, what I need to do, it's my total cost, right? So it's this one over. Let me take this one over here. This one over here. It's that one plus what I need to pay the investor, which is this. Sorry, am I right?
Plus your costs, your selling costs, right?
Right. So plus what I need to pay the investor. Oh, sorry, now I'm messing it up. Plus my selling cost. That's right.
Yeah.
I'm going from a slightly different angle than the way that you calculated it, but this is basically what totals up to what I need to make, right?
You're right. 515. Yeah. Yeah.
So this would be 515. And so what happens here is that I would be able to pay everybody, but I won't be making any money myself. So
Okay. And what about, just out of interest for you, what would be your sort of, I mean, I know zero is where you break even, but obviously it doesn't mean a good return on your time, does it?
Yeah, of course. So,
what's the sort of, like, for you to say how this was a success, what's your minimum return on your money?
Well, I think, at least I would want to make the same as the investor. Then basically my time and effort is going to be for free. Right. So my return would have to be around 30% as well, which means 30% over the 145, which 145 times 30%. So that would be about 43,000.
Yeah.
So in this calculation there is some upside for me. I think I expect that I would be able to do it faster than 24 months, and I would expect to get a higher selling price.
Okay, but you factored. I mean, the important thing is you factored in conservative numbers, right?
That's right.
Which is really important, isn't it? And putting these together,
especially because you're offering a fixed deal, so you need to have a feeling that, look, is this doable or not? And to be honest, I mean, there are certain, in the UK, for instance, the terms for deals like this is usually that the investor takes all the financial risk, but then they get a 50% of the profit.
Yeah. But you're an investor as well. That's the point, isn't it?
Right. And the reason why I do that is because I need to build credibility and trustworthiness with my investors. So my own money is on the line. It's not my first project. So a lot of factors are already taken away, but there's still factors. For instance, it is Jakarta, it is Indonesia. How about, floods? How, these, the concerns that any investor would have for doing property are still valid. There are still some insecurities in this deal, but most of them, I think, are mitigated because I've picked this particular location and did this particular deal.
Yeah, I wonder as well. I mean, the UK, it's not unusual for the kind of deal that you talked about where there are a project manager and an investor, and they have quite distinct roles. Yes. But that's maybe because the UK is much more mature as an investment market. People are much more used to those kind of deals, right? Mm-hmm. So there's a track record, whereas in Indonesia, it's a lot newer, isn't it? So you kind of have to go in and show people, like, this is how it's done.
That's right. Although I have some interest from people outside of Indonesia, but it's most likely that the investors are going to come from people that either have been here or are here. Because, of course, for an investor, there's also the exchange rate risk, right? So if you would invest from overseas with me, then and you would invest from Europe or from the US in a currency that's different from the Indonesian rupiah, then you would have to factor in this exchange rate risk.
Right. Yeah. I mean, it may be a reason why people want to get in because they're mitigating a risk somewhere else. I mean, that's why I'm buying in Japan, is because my investments are all in the UK.
Yes.
So buying in Japan helps me spread that risk. So what may be a risk may also be a hedge against a risk as well, right? For some people. I mean, Indonesia is not necessarily the first place you'd think of, but for some reason, for some people, it may be. It helps balance against maybe having all your money in Europe or having all your money in the US, for example.
Yes. Yeah. And I do have some interest from overseas. Let's see. I think that something might come through there, but most likely it will be people that are interested here.
Yeah.
Yeah.
How are you going to go out and sell this then? How are you going to go out and get people interested? What do you do? What's the process for getting people?
Now, this is interesting. So, I have a list of, let's say, people that I've spoken about this before. I had another deal before that didn't happen, which I spoke to a few people about. So those are sort of the people that already know what I do. Mm-hmm. But this is a bit tricky. But I tricky in the sense that if my investors will go and see this later on, they might think, oh, this is how he approached me, right? So, but now here's something that I do is I literally go to my phone and go through my phone book, starting from A, and every name that is on that phone book list, I think, could this be a person that could invest with me? Would this potentially be somebody that could invest with me? And my filter is quite low. So, obviously, if it's my driver, I won't call him for this, right? That's an obvious one. And I know people's economic situation for the most part, right? So I could judge on whether or not they would be able. But don't forget, there are people with a good network. So I have people that have a very good network. I haven't used that yet. So that would be, say, could you help me find an investor kind of approach? So I tell them, look, I'm looking to raise, $285,000 US, $3.6 billion. I'm offering 15%. Everybody that I approach, I give them the terms right away. This is what I'm looking for. It's for a property deal. I'm offering 15% per year. Would you be interested? If they say, no, I don't want to invest anymore. Some people come back to me and they say, look, I don't want to invest in Indonesia anymore. I'm too exposed. I have too many assets here. Fine. Then I go to my spreadsheet. So I have a spreadsheet with basically a lead tracker, right? Where I put in all the names of the people that I contact, and I write down what the response was. And I make sure that, okay, if this guy or girl says that I currently have too many assets in Indonesia, I don't want to invest. Implicitly, that means that, look, he does have the money to invest. He just doesn't want to do it in Indonesia. If I would have an opportunity in Europe or in Holland, I would then probably go back to the same person and say, hey, I heard you told me you want to diversify your risk. I have an opportunity for you to do something in Amsterdam. Would you be interested? So I'm getting quite systematic about it. Look, I'll be very honest. I don't know if this is going to work, right? So I'm sharing this with the group in the sense that, look, this is not completely new, but this is an adventure for me as well, and I don't know where this is going to end up. But my phone book approach so far has worked. Plus, I put it on social media, right? I put it, and I will do that again, saying, look, I just put it out there saying, look, I've done property for 7 years in Indonesia. I'm now looking to raise money. We're looking for 3.6 billion at 15%. Who would be interested? One person replied to that. So I've got one lead from that approach. But otherwise, phone book. And I've not even gotten to Z yet. I've not gone through my whole phone book.
Yeah, I think as well that what you're doing is commendable. You're doing far more than even most property investors are doing, like me, in terms of putting yourself out there and, trying to raise other people's money, which is the key. You talk about Robert Kiyosaki again, Rich Dad, Poor Dad. It's always the challenge, isn't it? That's what you need to master as a skill. So the fact you're doing it, even if you don't think it's correct the way you're doing it, even if you're not 100% sure, you've started that process and you will improve, right? So that's really important. And then other people, if they really want to scale, they have to learn how to borrow other people's money and not just the bank, right? Because, the bank will get you to a certain phase, but to get to the next phase in property, you have to be able to go and borrow money from human beings, right? So you've done that. And I think that's important. I think, like you say, your approach, like you've got some people who come back and you've got, your phone book approach as well. I think another part of it is that, you put yourself out there. And I imagine that in most cases, when people get involved in investments, they get involved when they decide they want to invest in something, right? That's most cases. Like somebody says, oh, I need to invest some money or I need to create some money. So they go looking. Who's out there? And so, that Erik guy, I remember Erik, he does this, he's a trustworthy guy. And, maybe not this deal, but, in 6 months' time, people remember that and come back to you. And I think that's a really important part of it. You've got to put yourself out there and let people know that you're in this business and this is what you do. And that if anybody is interested in the future, maybe not right here, right now on that deal, but at any point, you're here. I think that's a really important part of it. And so I guess my point is that it's really important not to give up because I imagine 95% of all the leads you've created, and I'll use the words leads because this is business, but 95% of all the leads you've created are out there, but are not ready.
Absolutely.
Yeah.
Yeah.
That's really important, right?
Right. Or something else can happen as well. And that is that you, like today, I had lunch with a very good friend of mine. And he had not seen the proposal, but it's because I am very public about what my fundraising effort is at the moment. He had picked it up on, I think, on Facebook or on LinkedIn. I don't know. And he said, look, I know this guy that is really good, because I told him about the struggle of what I'm doing, how I'm approaching people. He said, I've got this guy who's really, really good at pitching for investments. Would you want to meet him? I said, of course I want to meet him. Right. So well, let's call it sales, but in this kind of fundraising or sales, I mean, you have to get over your own ego. That's the first thing, right? You need to say, this is what I have to do because this is how my business is going to grow. And when my business grows, I grow. I look at it as, look, I've got a fantastic building team in Jakarta. I want to keep them busy, right? So 1 project or 2 projects a year is going to be a problem for them because the builders are offsite now. They are workless. Well, if I have 5 projects, I can have a constant flow of business for them and they can keep working and they can keep making money. They can make a salary. So that's sort of my motivation for growing this business, right? I want to get this team to keep working and keep being busy and keep making money. So if that is my motivation and that's why I'm out there, then it is really, really about doing this a lot. So I've now maybe had 25 meetings about this kind of investment. The more you do it, the better you get at it. And it's not like you're better at luring people into your world. You're better at just being confident about what it is that you're offering and what it is that you want. If people say, I want to have, 20, I want to do this, I want to split 50-50 with you. Sorry, I'm just not offering that. And the reason why I'm not offering it, because I do not want to have the hassle and the argument about the profit margin. I will give you a fixed deal. This is what I think I can afford on this deal. There might be another deal where I offer you more. There might be another deal where I offer you less. So you get more confident also about the kind of things that you're putting out there. And I think it's a really good skill to have. And on top of that, I found out that for me and the kind of life that I'm leading and that we're both leading, we need to create activity whereby we're forced to get out of the house and be face to face with people. And it's so enjoyable. I mean, I don't even consider it selling anymore. And I'm completely over the fear of rejection or being upset if somebody says no. That's fine. Nobody is forced to do what I offer them. And if it's not compelling, the people that are interested, they're usually very interested. They're like, really, I want to do this. I will find a way to go and do this. I might not do 3.6 billion, but I will be able to do 1. Okay, good. That's fine. And so far, the experience has been very positive. And, I think, like you said, what it does, it puts you out. If you tell everybody in what business you are all the time, they will remember. Like if you tell people that I'm doing radio shows or podcasts, and you tell that to everybody, right? I do Asia Tech podcast. I do Lazy Money Machine. This is how I live. I do Ironmans. Those 3 or 4 things that you tell people when you meet them, that will stick with them, and especially property. And I learned my lesson yesterday when I was in my EO forum. I'm a member of the Entrepreneurs Organization, and I'm in a forum. And I learned again there that for myself, I sort of downscale or not downscale, but sometimes I think about, property is an investment. Property is not a business. But I've sort of come around to this again, which is, there are not many people that are in the business of property. There are many people that own the house they live in. But to be in the business of property is something that not that many people do. And that skill and that knowledge and that position and that experience it puts you, ahead of many others, I think. So. Yeah.
I mean, for you, property is both an investment business and a lifestyle business in a way. Because you're far more active in property than I am. I'm a real passive income investor.
Yes.
But that's by choice.
Yes.
So in a way, you have a lot of skills which I don't have. in property, that's fine, but that's because it's your business as well, right? Mm-hmm. And I think, the going out and the selling part of it as well. I mean, it is sales. I mean, let's not sort of beat about the bush, but sales is the lifeblood of any business, and any entrepreneur, anybody watching today who has their own business, it's like your business will live and die by sales. That's right. It. Nothing else. Either the sales are below the costs or the costs are above the sales, right? It's the same with your business, right? And going out and selling is key to investment.
And that's
right as a business.
Yeah. And that's, look, the other thing I think for me is that it's good to be vulnerable and open to yourself to admit the stuff that you're not that good at. And I have always avoided the selling part in any business I was involved in. So I thought this time around, this is where maybe that's why I'm maybe stuck sometimes, right? Maybe I'm stuck in certain things because I'm not doing the stuff that is actually there to be learned. And in my case, this is what I need to learn. This is what I need to do more so that, I get better at it and can grow the businesses I'm involved in. Same with Lazy Money Machine, right? Exactly the same thing. We need to do online advertising, right? And you and I have been working on this for the last couple of weeks. It's the thing that we both have to crack because we've both had experiences with this where it didn't work well enough. So to put your time into the stuff that's actually difficult and frustrating and not working, if you break through those things and you make, advancements in that, usually it takes your business to a completely new level.
Mm-hmm. Yeah. I mean, it's good, Erik, what you're doing. And, back to you're putting yourself in a position which you're challenging yourself to learn something and break through a barrier which is holding you back. I think, one of the key messages for entrepreneurs as well is about selling itself. It has many different forms, doesn't it? It's not just, people think sales is like a certain type of sales, like getting on the phone and selling or pitching, cold calling, or, you walk into a store and somebody says, "Can I help you?" That's people's experiences of sales, but there are other ways to sell, and you sort of maybe found a way of selling which you're good at, which isn't the other type, right? So, anybody who owns a business in this group, my advice would be look at Erik. It shows that, you can sell, but maybe you just haven't discovered the way of selling that's good for you. Maybe your way of selling is not doing presentations like Erik. Maybe your way of selling is, going out and, like doing events or holding seminars or whatever, or writing a book, right? People have different ways of doing it. But each one of those is all about putting yourself out there and drumming up interest, right? So, but you've got to challenge yourself and put yourself into that position to do it. So, I think that's what we've got away from today is that, that key message is that investment is a business in your case, right? And if it's going to be a business, you have to learn how to sell it.
Yeah. It depends a little bit on what you do. But even like the portfolio that you have, Graham, in the UK, when you built this, right? Now you're not doing that much in changing and refreshing it. But the time that you were building that portfolio, it was an activity and a business for you. It must have taken a lot of energy and time for you at that point, right?
Not really.
Okay. All right. Fair enough.
Not like, I had a business at the time. So
that's right.
I had it couldn't, right? At times it did take up a bit of time, but nothing that I would consider it to be a business.
Right.
But that was conscious. There were a lot of people I knew who treated it as a business, and I could have bought a whole lot more properties and done a whole lot more, but they deliberately said, right, that's it. That's enough.
Yeah. Well, I think, that's what I want to close. You don't have to do it the way I do it. You don't have to do it the way Graham does it. But, that's why we're here, right? We don't pretend that you need to do it either way. In our book, we're sort of guiding you through some principles on how to get started in property and why building a portfolio is important for your time freedom and your money freedom. But there are different ways that, can lead you to that point. I would suggest we filled the hour, Graham, that we leave it at this.
Yeah, it's good, man. It's good. Really interesting. And thanks for sharing your data, because we so rarely actually get to look at deal data in this context, right? And it just kind of makes it all a bit more three-dimensional.
Yeah. I'm happy to share that, and I'll keep everybody posted on the progress of raising this money from investors. And I guess we'll see everybody back next week, same time, Same place, Facebook Live, Lazy Money Machine Live.
You've been listening to The Lazy Money Machine. Find out more at lazymoneymachine.com.